What's going on, everyone? Welcome to Swan Signal Live. I am Hurley, filling in for Brady today as he's away with the family, I believe. But welcome. We got Brandon, we got Steven, we got John here. Lots to talk about in Bitcoin land as always. Crazy week. And before I get started, I got to remember, or P will hurt me. Shout out to Mara, the largest publicly traded Bitcoin miner, for supporting the show and for helping make Bitcoin the world's most decentralized and secure monetary network. So yeah, how's it going, guys? How you guys doing?
What a week, man. It's been
Crazy.
nonstop. You can't get a break. And I mean, how long has this term been going on? We're March 14th. It's been not even 2 months. Feels
Yep.
like an eternity has happened.
It really does. I know. It's relentless. But yeah, that's Bitcoin land, right? It's like there's always something to talk about. And man, the economy has been taking a beating. I guess we can start off in kind of the macro lens. I know there's a little bit of a rebound recently, but man, this chart here is just shocking. The first term in Trump in blue there for the first year of his first term, I believe, and then the first few months of his second term, and that's the S&P 500 just tanking. And so I think the Trump administration is feeling the pain a little bit, even though they're still talking like it's all going according to plan. Short-term pain for long-term gain. What else did they say? They say that it's the detox. They're detoxing the overspending, and I got to give them kudos too for recognizing that we're on an unsustainable path. Because as gold bugs and Bitcoiners have been talking about for a long time. But are they? Now they're getting pressured. Are we going to hit a recession? What does this mean for markets, for Bitcoin specifically? Obviously, a lot of people I hear are talking about worried about a bear market. Oh, we've entered a bear market. We're screwed, right? So there's just a lot to talk about. So I don't know who wants to dive in first. Maybe Steven. I know you got some thoughts on that, but
for sure. So actually, I'd even kind of push back on the initial thing you said. You said the economy's taken a beating. Actually, the economy is doing great. The stock market has taken a beating.
Yes.
And these are like two very different concepts, because all the economic data we've had come out is like really pretty good. Unemployment's slightly down, inflation's down. GDP is a little bit lower, but there's a lot of noise in that. That really dismal negative print was total bullshit caused by a huge amount of imports throwing off the calculation. So the economy is actually pretty fine. And that's one thing the Trump administration keeps actually landing as a talking point is, actually there's a difference between the business on the ground reality and the stock market. But the stock market has been like the worst performance in the first 2 months of a new term that I think we've ever seen. It really has been. It's not that a 10% drawdown is so unheard of, that it's the speed. And it makes sense that it's happening. I've been saying this for a while. It's because you have an administration. I mean, you can keep it this simple. Trump, Bessent, and Powell all want the stock market to go down. So it is. It's that simple. The stock market is used to administrations propping it up and putting a lot of money, doing a lot of accommodating positions. And so this is a brave new world where, for different reasons, both the executive, the treasury, and the central bank want stocks lower. And so lower stocks is what we've got. And that's what's been driving Bitcoin performance. The good news here is it has almost nothing to do with the realities of Bitcoin. It has nothing to do with kind of anything that really happened to Bitcoin. I actually think Bitcoin's in a really strong place on a few fronts. Now, what hasn't been going so well is at least the kind of verbal targeting of the strategy of the Trump administration is saying we want to get the 10-year down. We want to see the 10-year come lower. It's come down a little bit, but it's not, compared to how much we've gone down on the S&P, I don't think the 10-year has come down enough at all. So you've seen maybe 40 basis points of a lower yield. From like 470 to 430. I would have wanted to see a lot more than that for the amount of pain we took in asset markets. So I think that's a problem. And I think one reason that happened is, at least on some level of the strategy, it's saying, hey, If people are fleeing stocks, they'll buy bonds. Ironically, what happened is they bought international equities. And so, I don't know what everybody's thinking, but it's hard to see that as been like the intended outcome, where people sold US assets and actually bought European and Chinese equities. Those markets have been doing great. So if you were a European or a Chinese equities investor, you had a good month. You had a dismal 5 years, but you had a good month. And we're just navigating. So this goes a little long. Let me make one more comment, pass it off. The one kind of real data point that I think matters is in kind of the landscape of this correction in the stock market. The administration basically made no comments about it. They didn't really address it. The only thing they said is, we're not really watching the stock market, which of course made stocks fall further. In the last 48 to 72 hours, they've released 20 statements. What that tells me, we're in the zone where it's starting to be painful for them. It's painful for people. And I think people are losing a little bit of faith in some parts of this strategy. Is this really going to work? How much pain are we talking about? Do the benefits, is it going to be worth it? So I think this is something they're going to increasingly have to navigate. My personal prediction, I think they can handle maybe another 5% down, and that's about it.
And what do they? Sorry, yeah, go ahead. I'm going to go to you in a second. But what do you think? What do you think they do if there's another 5% down? What is their what is their? I think I heard you say in a video that there is no Trump put, but there is. What was it? There is no. Yeah. There is a Trump call, right?
Yeah. So this is something Bessent said. So the Secretary of the Treasury, he was asked if there's a Trump put. A Trump put is saying, is there a level we're going to get to where Trump's going to support the market? And Bessent basically said no, but there is a Trump.
And then they
call.
dump further.
Yeah, and then it dump further. And so it's saying there's upside. I read that as like they are going to come spend and do stimulus and do these things. Like it is going to happen. They will. That will be kind of. Stocks will be happy then. It just isn't yet. So the question is like, once we get to that point where they really can't take the pain anymore, I mean, there's many things, right? So obviously a simple one is you back off the tariff strategy. You back off some of these things that were put on. Does he want to do that? Is he willing to do that? We'll find out. If you don't want to back off the tariff strategy, something he could do is he could do corporate tax cuts, right? So let's say you have a 10% global tariff that makes, let's say, it feeds into the inputs. It's not a straight 10%, but let's say, call that a 10% drag on stocks. If you then cut corporate taxes by 10%, you can offset that, not in terms of prices in the real economy, but in terms of asset investors. So tax cuts, he can deregulate, they can spend money. So they'll have to figure out which of these policies, or the Fed cuts rates. But I think like we've got another 5% and you start seeing policy adjustments.
All the little levers that they can pull, right? To
correct.
To change the economy. All right, John, what are your thoughts on the broader economic kind of outlook?
Yeah, so I definitely want to offer some thoughts. But first, Rob in the chat, I think, has a fair comment. So Stephen, he was questioning, you saying the economy is fine. I think I can tie the pieces together here. Let me know, Stephen, if you agree with this. But I think, Stephen, you were more so saying that the 10% decline in U.S. stocks, the magnitude and exactly when that happened, we're not saying that signals the economy going down, not 10% exactly, but it doesn't signal a significant worsening in the economy as like a 1-to-1 type of thing. I don't think you're making the case that the economy is this great, healthy, balanced, sustainable thing. There's probably plenty of things that you would point out that the U.S. economy needs to fix over the long term. Do you want to just address exactly what you were getting at when you're saying the economy's, okay?
Yeah, so I mean, definitely agree with the part you framed of just like, this isn't like an economic deterioration that drove down stocks. So it's not like GDP fell 5% and so stocks are down 10%, or we expect corporate earnings to be down 20% next quarter or something like that. But I do think so. I get the question, and I think people get, I think it's hard to talk about, because if you say the economy's fine, people will be like, well, hey, like we've got these issues. We've got like, the kind of asset owning class has done very well. The labor class has not done well. Is that a fine economy? That's not what I'm saying so much. But I think in terms of like, there are of course problems, but I think in terms of like, we're talking about markets, basically growth, inflation, unemployment. Those are the big three. And I am saying, I think those big three are pretty fine right now. It's not like the best economy we've ever been in, but we have had way worse ones throughout the 70s and 80s and 90s. Inflation is really relatively low right now. Even the CPI is not too bad. If you have trueflation, which is like a real time, they're saying it's like 1.3%. So it really has come down. And, you know, growth.
Except for in eggs.
Yeah, except for an egg. Obviously,
yeah, we're going to need to start diversifying. We're going to have to contact P. He's got chickens. We got to diversify into eggs from Bitcoin because that's crazy. 307% in 5 years.
100%. But you know, I think like the top line number is relatively normative. GDP, like, you know, it's not like raging growth anymore, but it's okay. And unemployment is okay. So in that sense, those big three, it's fine.
I totally agree that when you said it's tricky to talk about, I think any words like economy, even inflation, it's one of those things, the old joke, it's like you ask 10 different people what the economy means, you'll get 11 different answers. So I think it's just hard to really say, is the economy good? You need to like, you know, get it down, drill down deeper. So yeah, there can definitely be some confusion there. But hopefully that helped elaborate a little bit. I'll just offer a quick thought on the macro stuff, which is, I think the $1 million question is how much pain in magnitude and duration is the Trump administration willing to endure here to kind of reorient the economy, get their policies in place, get the 10-year down, all the things that they've talked about. I don't think, you know, anyone can claim that things are going to turn on a certain day unless you're Josh Mandel. Apparently you have that skill. I'm glad I called him Josh. I always want to say Howie because the Howie Mandel, the comedian, but Josh Mandel, I think we'll get to this later in the show. If you don't know what we're talking about, we'll explain in a little bit. So because, you know, I'm not going to call a day when the Trump administration is going to say, hey, this equity market pain is getting a little too big for us. I think you need to talk in terms of ranges. And maybe some people might say, hey, you're giving too big of a range here, but I'll just start with this as like, you know, we can take it from here. I think it's somewhere between like 3 to 12 months. The worst case scenario would be that the Trump administration is willing to have 12 months of equity market weakness that takes us into Q1 of 2026. And that, again, this is a worst case scenario. It's not a base case scenario. But they say, hey, look, we just won. We have all three branches of the federal government. We're going to reorient the economy, get our policies in place. We're doing this long-term switch. Hasn't been done in generations, and you guys just have to deal with equity market weakness. I think really a year is like the max that they could do that for. Because
midterms too, right?
Yeah, once you get into like mid-2026 and you're approaching midterms, are you really going to risk losing the House and the Senate because most people are just looking at their pension, 401k, their IRA, their brokerage account, and they're all saying, hey, what the heck is happening here? So, you know, they're not just totally unconstrained in this. I'm trying to give the worst case scenario. That would be for broad risk assets, though. There's still something worth saying for Bitcoin here, which is, and we'll also get into this on the show, even if equity markets are soft for another full 12 months, that's my bear case, that doesn't mean Bitcoin's going to be flat, because there could easily be an announcement of the US government. They've already been tasked, Besson and Lutnick, to buy more Bitcoin budget neutral. If that announcement comes, and, you know, Bitcoin could easily rocket up 10K, 20K, something like that, while the equity markets are flat. And it doesn't just have to be the US, right? It could be some other country that announces, hey, we're now adopting Bitcoin as well. So given that as a backdrop, to be perfectly honest, I would feel better holding Bitcoin than I would, you know, general US stocks at this point in time.
Yeah.
Couple points here. So on Trump, how long can he handle the pain? What do the tariffs do? How does this all come together? I thought Lutnick's interview on one of the mainstream medias was pretty interesting. where he mentioned that the goal of 150K zero taxes, right? So that little piece, what else did he say about that? Yeah, it forces countries to pay a membership fee to sell in America. I think that's an interesting frame. But if he does that, okay, let's put it all together. Tariffs are inflationary. Of course, you raise the cost of importing goods. If you reduce corporate taxes, asset NGU, okay, great, asset holders are covered. And if you reduce Main Street taxes, great, now you offset all the increased prices. So you can essentially just shift the burden around a little bit, and individuals and asset holders both end up being okay, and the rest of the world pays more. I think that's pretty, I don't know if they can pull it off, but I see the picture, and if the picture works out, I'm in.
They're sure going to try, right? We'll see what happens.
Yeah.
Did you want to mention anything, John, about that gold stocks bond chart, or did you want to move on to gold all-time high?
Yeah, let's do that chart, and that'll propel us into talking about gold for a little bit. So Bob Elliott posted this. I think he's a solid macro analyst, and I think the comment he had in his post was reminder that you don't have enough gold in your portfolio. And just to elaborate on that a little bit, so the lines here, top blue line is a Vanguard equity fund. I believe it's total stocks, which means it's U.S. and non-U.S. stocks. The middle yellow line is gold, and then the bottom blue teal line is bonds. And in the last 5 years, you can see bonds have just gotten crushed with a negative 40% total return. The stock slice that he chose here is up basically 100%, and then gold is up 95%. So you can basically call stocks and gold, the same total return over the last 5 years. Bonds have gotten crushed. What is kind of the elephant in the room when you're looking at this? It's the 60-40 portfolio. It's the portfolio that so many people have that's just been on autopilot because the financial advisor community says 60-40 has been great for 30, 40 years. What could go wrong? But things have changed in the last 5 years, and that chart is case in point. Many people don't view gold, or historically have not. Maybe it's changing a little bit. That's kind of the point of this. They just haven't viewed gold as a normal part of your portfolio to have over the long term. But if you look there, I mean, having a 60-40 portfolio, you just got crushed with bonds. And you're either predicting that the environment that is good for 60-40 is going to come back, or you're saying, hey, we're in a sea change here, and harder assets like gold, and obviously the implication here is Bitcoin, are going to get adopted. They're going to have a place in people's portfolios. And we're only in the first inning of people realizing that these hard assets have a place in your portfolio over the long term. That last that's obviously where my views are. So I just think it signals that people are saying they're waking up to the fact that gold is a good asset to hold over the long term. Barbarous relic. I believe that is a John Maynard Keynes quote. And I think people are waking up to the fact that gold is a good asset to hold in this environment. And if you wake up to that fact, you're only an inch or two away from realizing Bitcoin is a great asset to hold.
Yeah, and on your point, Brandon, gold is now a $3,000 per ounce barbarous relic. So Hit a brand new all-time high today. First time ever reaching $3,000 US per ounce. I think Vijay Boyapati had some great insight here, saying the seemingly unstoppable rise in gold is part of a bigger geopolitical shift, the breakdown in the Bretton Woods monetary order. And I tend to agree with him, even if everyone's not talking about out loud that that's happening. I feel like that is definitely happening in the background. And a new, what do they say? It's going to be called the what's the new? Not Bretton Woods. It's the what's
Plaza
Trump's
Accord.
Yeah. Oh, the Plaza Accord. But then there's like the Trump one, right? From the
Mar-a-Lago
Accord. Yeah.
Yeah.
Anyways, and just going off that, and just I can't not show this.
By the way, the Mar-a-Lago Accord, I need to do something for my buddy Daniel. He first coined that term in June of 2024, and it has now been what's the right word? Appropriated by people very high up in the administration who anyways, so just shout out to Daniel, the original coiner of the Mar-a-Lago Accord.
Credit to him. That's early if he did it in June 2024. And Hurley, by the way, I like that you pretended you didn't know what the name of it was. We know you hang out there with Trump all the time. That was a really good cover, pretending that you don't even know what it's called.
Mar-a-Lago, yeah, my favorite place. I'm there every weekend. Yeah. But yeah, and then there's the Bitcoin gold chart.
It's crazy though. So I mean, it's unreal that gold has kept up with the S&P over this 4 or 5 year period, because what that tells you, so like that's surreal, right? Like, let me just lay out a little bit of the framework here. That's saying that the total capital investment and productivity gain of all US enterprises, all the technology, AI, all the growth of these companies was effectively netted out against an asset that generally only increases with the money supply, which then has you asking like a really interesting question of like, well, what drove stocks higher? Like, there's generally, it's not that simple. You could say it was undervalued and it's being revalued, but like, it's still insane that just a pure store of value kept up with all the productive growth of US enterprise over the last 5 years, where growth has been high. Surreal.
Yep. And then, I mean, you can't get much more bullish than this. I'm not much of a chart wizard, but I mean, this looks bullish to me. What do you guys think? I mean, this is Bitcoin priced in gold. And yeah, and we, as we know, usually gold kind of starts off the race a little bit early, and then Bitcoin overtakes it. So we'll see what happens, but I'm pretty bullish on Bitcoin priced in gold.
Yeah, one comment on Bitcoin versus gold. I think that is the chart to look at right now as the monetary order is starting to get shuffled a little bit here. I wrote back in 2020 when I was exploring the fourth turning stuff, what happens if we change monetary order? And I think there's a lot of potential energy in the system right now for a gold 2.0, Bretton Woods 2.0 type system. Not really coming out of the US, but I could see non-aligned countries attempting to go that route. However, Bitcoin is also at the heels of gold, right? And I think that is the next battle, is gold versus Bitcoin. And I think watching that chart right now, I don't know if we're going to see a Bitcoin breakout in the short term there. I expect us to range here for a while personally, but to me, that's the scorecard of what's the next future reserve asset, is that exact chart.
Yeah, long-term bullish for sure. Who knows when the breakout's going to happen, but I mean, you got to think of it. Like, I just go back to like the whole, the title of this is the Bitcoin bull market in jeopardy. And it's like, it's just crazy to me that, we're in the best risk-adjusted time to buy Bitcoin ever, like in its history, right? We have the most incredibly bullish SBR announcement that you can imagine. ETFs, the world's largest asset manager, BlackRock's marketing Bitcoin to the world. We have Saylor's strategy, like he's just raising another 21 billion. What is it it's like he's racing to buy 1 million Bitcoin. We got corporations following his LBE playbook. I mean, it's just like Bitcoin has not changed, as I think John had said in the previous episode. Bitcoin is the exact same. It's just people are just still catching up to the fact that it's not. I think it's kind of interesting that it's still to this day considered a risk-on asset, right? And still trades like a risk-on asset. But
yeah.
One more point on that one, Hurley, on best time to buy risk-adjusted. I was tweeting this week essentially because in my head it is the best risk-adjusted time ever. One counterpoint in the comments that did stand out was in October 2024, right when the regulatory shift happened that made way for the ETFs. I think Bitcoin was like 30 or 40K and very quickly ripped.
October 23, right? October 23.
Yeah, sorry, 2023. Yeah, exactly. And I mean, that's a pretty strong contender as well.
Yeah.
Because that made way for all the financialization. You could have maybe said the risk or the odds of an SBR went way up that day.
Sure.
Right? I thought that was pretty interesting. Otherwise, March 2020 is always the one I had in mind. That 3-4K dip right there.
Oh, yeah, here, this one. Is that what you mean, Brandon?
Yeah, that looks like March. Oh, no, March 2020 was even lower.
Yeah.
Oh, was it?
Yeah, he's talking about like the pre-ETF kind of pump.
Oh, okay.
But it's Yeah, I mean, that was an incredible window. I mean, that was a phenomenal time where you could just really deploy capital into Bitcoin with very little concerns. And once again, it actually sold off after the announcement. You know, interestingly enough, like the spot ETFs got approved, it sold off, it then rallied for months on the ETFs. I think we see a similar thing with the SBR, which I'm very confident on. I think the market is majorly mispricing it.
Definitely. Yeah, I've never seen such a missed correlation between the two. It's crazy. And then we got this news. I mean, take this with a grain of salt. It's a White House official told a room of crypto industry leaders this week that there should be no limit to the size of the U.S. government's strategic Bitcoin reserve. Obviously, that is true for us. And I mean, I think if you look at something like this that we've showed before, the White House came out and tweeted that they want to be the Bitcoin superpower of the world. If you take out their Bitfinex, the coins that I think are belong to Bitfinex, they are under China. So you got to think that they're 100% going to be acquiring more Bitcoin, and soon, right? Like it's got to be pretty top priority right now.
Yeah, exactly. Well, and they've said this, they've communicated this. I've talked to a lot of people working on this. There is real enduring interest in raising the size of this holding. Like what's happening right now is the volatility in the stock market is just outweighing any sort of enthusiasm on Bitcoin. Investors are scared. But it's mostly that no one really believes they're going to make incremental purchases here. It's so outside the status quo. It's nobody believes it's going to happen, and it's completely not priced in. I would say it's like basically 0% priced in. And I think as soon as you see those first purchases start to roll out, the market races to price that in a hurry. I mean, it will really turn heads when the U.S. actually starts buying Bitcoin. And that's just ahead of us.
So I think in the short term, that's true. We announced we're going to buy, number go up. But I think the bigger statement, Hurley and I were talking about this pre-show, I think 80% of the SBR value is saying that we're going to create one, whether we incrementally buy or not, because it signals to the rest of the world that the game is on and you better play. I think the incremental buying, that's one more incremental step, and it's probably more bullish in the short term. Now, if the Trump admin really gets creative and tries to like compete for Saylor numbers or something like that, of course, there's no ceiling on this thing.
So I agree. I think that first buy is really what says the race is on, because I think there's a way you can like write off the current thing as just like, all right, they stopped selling the coins. They tossed a bone to the Bitcoin guys. It doesn't go any further. It's like a weird idiosyncratic Trump thing. True. That's not how I view it. I don't think that's the right view at all. But I think people are writing it off like that. And I think the first buy, no matter what size, like even if it's like we sell some of the foreign assets in the crypto stockpile and buy some Bitcoin with it, or we sell the stable coins from the crypto stockpile and buy the Bitcoin, I think people completely start rethinking it rapidly.
That would be the best signal to add on to the strategic Bitcoin reserve crypto stockpile separate, is to sell all the crypto stockpile, buy Bitcoin. Yeah. That would be ultimate. And I think, I mean, how could you not do that? Anytime you I remember I dabbled in altcoins for all but a couple months, and then immediately it was just, what was it? Ethereum, Cardano, sold them for Bitcoin. And it was like, I was cleansed. So I think the government will feel the same way.
And they're not going to sell all of it. I would be skeptical that they're going to sell all of it. They won't sell the Ethereum or the Solana or the XRP. But I think there's a very strong argument they'll sell two parts of it. One, the stable coins, because why are you like, they don't even have like a changing market value. You got $300 million in stable coins in there. Why not just sell it, buy the Bitcoin? And then I think there's this interesting thing with the foreign assets. So why are we, the United States of America, holding Binance coin in our strategic stockpile for an East Asian exchange company, right? Like that's not an American asset. That's a foreign asset. And so sell it. It's some $30 million, buy the Bitcoin. I think like the reason I'm saying I just don't think the full thing gets liquidated, at least at this time, is just because Trump's obviously still trying to play friendly with the American crypto companies.
Yeah. I had this in yesterday's video. I was kind of putting out how, I mentioned earlier how it seems like Trump is, and the Trump admin is like trying to thread the needle with the economy and trying to, with the tariffs, reorganize the balance of the trade. And and they're trying to do all this stuff, fix all the levers to fix the economy. It's like their Hail Mary, right, to fix U.S. dominance. And the real Hail Mary, whether they realize it or not, is their Bitcoin strategic reserve. And it's like that's what I feel like can really, bolster the United States to be the superpower for the next 100 years or more. And Saylor had an excellent presentation at the BPI Summit earlier this week. We can play a clip from that where he kind of goes through all the different, even if they just hold the 200,000 Bitcoin or so that they have, and then all the different plans, and it culminates in his superpower plan, which is pretty crazy. But yes.
One thing to touch on before we go to that too is, so I think there's a really interesting tie-in with Trump policy and Bitcoin in this kind of, I think it's people don't directly see it. So what we've seen in the last few weeks, right? Like the dollar has come down, the dollar has weakened, and they've wanted that. That's fine. That's been kind of a goal. And you've seen huge capital inflows to international equities. So European stocks did really well. Chinese stocks did really well. If they actually interrupt this kind of dollar recycling, dollar milkshake into U.S. assets, and even foreign investors take 30% of their money and go home and kind of do their own stock markets, that's actually a really interesting bull case for Bitcoin, where the dollar entering a more level-ish playing field with some other currencies, U.S. assets not having this incredibly privileged, unique position, and there's a little more capital rotation going on. I think that actually is a strong case for Bitcoin as this kind of neutral global asset that in changing economic times, you can make a case to hold.
This is another one we should take a grain of salt. I think it was a Reuters article about that Russia is reportedly using Bitcoin and stable coins in oil trades with China and India to skirt Western sanctions. Even if this source is not accurate, I would not be surprised if this is in talks or at least happening or will happen in the near future, because it just makes sense for them to do that.
Agree. They've been flirting with that for a while. I feel like I've seen that exact headline 5 times in the last 5 years.
Yeah, I think even Putin has talked about it kind of generally.
Yeah.
But
one more on the strategic Bitcoin reserve. So I think it is breaking out of Bitcoin circles. If you saw on Twitter recently, some guy named Peter Schiff started a strategic Bitcoin reserve. And for some reason, people donated their Bitcoin to that clown. And it only took him about 1 week after acquiring some Bitcoin to start shilling shitcoin. So,
are you serious? I didn't see this.
People sent him Bitcoin. Yeah, I didn't see that.
Yeah, he goes, I'm creating a strategic reserve, budget neutral. He was kind of cheeky playing off the U.S. not spending their own money, and he thought he'd do the same thing. But in my head, this is his soft pivot, right? It's so defensible because it's a mocking of the government, right? And then he's going to end up with some coin. And then a year from now, he'll have a big stack and we'll embrace him.
I responded to him because he said, here's my Bitcoin address. If you want to donate to my Bitcoin strategic reserve, please do. And I said, Peter, post your address so that we could send you gold because we'd like to contribute to your gold reserve. And I didn't get an answer. It's weird.
That's good.
That's so funny.
That's good, man.
But yeah, I mean, just the narrative shift, man. Like I just remember when I first got in, it was like that was the biggest thing. I'll never forget my father-in-law saying like, "Oh yeah, but the government's going to ban it. They'll never allow it." I'm like, "Sure, interesting." And it's just like where we are now compared to that, where it's like the U.S. government is embracing it, and not just embracing it, but like educating people that Bitcoin is a valuable strategic asset. That there's a lot of upside for First Nation movers to do it, and it's like. You can't get any more bullish than that. You can't get any more like the Overton window has just been exploded.
It's really actually interesting how much shifted on that executive order. And I think people they haven't clocked it yet because the price basically immediately dumped after. And I think just the sentiment from the price is just overrode everything else. But yeah, the things, I mean, they drew a clear line between Bitcoin and crypto. They said Bitcoin's a valuable asset. It has strategic properties. You had David Sachs doing laps on TV. They've made more comments about Bitcoin since then than they even made on the stock market in the first few weeks. They've been talking about it. And that's, to your point, like that's such a reframing compared to these like early days of Bitcoin, it's like the government's going to ban it. They're never going to let it happen. They're going to shut it down. And we're seeing the opposite of that. And as soon as these kind of macro pressures let up, again, I think you see Bitcoin do very well.
Yeah.
One addendum there is, how funny is it that we used to have to say, hey, even if the government tries to ban it, Bitcoin's going to survive, right? That was the posture. Now
Yeah.
the posture is, even if the government goes all into Bitcoin, Bitcoin will still survive.
Yeah, there's like this mentality too that it's like that if governments start buying it, that it's co-opted too, right? Which is just comes from a clear just kind of misunderstanding of how it works, right? And why we would want Bitcoin in the first place, because it's like it takes the control mechanism of diluting the supply out of the hands of people that hold a lot of it, right? So
Totally.
it's just game theory, man. Like Bitcoin's for everyone. I did that. I said that in my video yesterday as well, that it's like, it's for the individual, it's for the family, it's for the corporation, it's for the nation state. They need it too. Like, and I think the US is going to, in this administration, I have high hopes that I really do believe that they're going to come to a point and realize, with the people that they have in the administration, they're going to come to a point where they're going to realize what they need to do with this thing. And that's a good segue to Michael Saylor's presentation, just the little tail end of it, where he kind of outlines all the different strategies for the US and buying Bitcoin and how it can offset the debt. And I mean, he's probably made this presentation to Trump. I feel like, when he went to the summit, he made a presentation. So I'm sure he's had conversations with someone in the Trump administration about this. So let's just have a look at this and get some comments on it. Oh, it doesn't seem to be working. That's weird. Anyways, that's odd.
Yeah, I'm sure he has made those conversations. I mean, they really seem bought in on this theme and on this strategy. So, I think it is something that becomes very tangible, and and to you guys' point, like, it kicks off a game theory. It kicks off other countries taking similar stances and actions.
One question on Saylor. So he's got 4.5% of the supply right now. Enormous amount. On Twitter, someone was saying, hey, Saylor stacking's bad. It's going to disincentivize others from buying. I don't think that's true. But at what percentage of Bitcoin supply would be a bad thing if Saylor acquires? Like, if he has 90% of the Bitcoin supply, that's obviously bad. 4.5% doesn't feel bad. But there is a threshold at some point there where we should say, that's enough. Pump the brakes.
Yeah.
Centralization risk, honeypot risk. What do you guys think about that?
So that's 100% true. And this isn't really an answer to your statement, but it is something I want to say. I think of Saylor the same way I think of the ETFs. The ETFs are millions of people's coins. So is MicroStrategy. It's not Saylor's coins. It is millions of shareholders' coins. It represents a lot of different people's holding. And as a public company, that changes a little bit versus Saylor just like unilaterally controlling something. It's obviously complicated because he can make decisions with it. And it doesn't change at all the honeypot question and some of the risks you said, but just throwing that out there for the conversation.
That's a good point.
I think it's a great question. It's one that we should all be thinking about. It is hard to answer, though. And I think it's because there is not a clear rule that says, Bitcoin, once you acquire this much, you now have this authority over Bitcoin. Exactly. We could go on and on about how Bitcoin's decentralized from many different perspectives, from a, transaction processing perspective, decentralized from an upgrade protocol perspective, soft forks and things like that. And that process is decentralized. It's messy. No one knows exactly, like, it's hard to get your arms around it, right? If it were centralized, there would be some sort of rule, and we would say, okay, once these people acquire this much, you now have this many votes or something like that. Because that doesn't exist, I think it's hard for anyone to answer the question and say, here's the line in the sand when it becomes concerning. I totally agree. Like, if you use extremes that, one ETF had 90% of the Bitcoin or one company has 90% of the Bitcoin, we all look at that and would say something feels wrong about this. We're not sure exactly what they can do, but we don't like it. So I think 4.5% is a long ways off from that.
Yeah.
So I'm going to, not give you an answer other than what I said so far.
Interesting comment in the chat here. I don't like the idea of anyone holding having 2 million Bitcoin. Fortunately, with Bitcoin, you can't. The only thing you can do is you can get a picket sign and go outside to Saylor's place and say, "I don't want you owning 2 million Bitcoin." If he wants to own 2 million Bitcoin and he has the capital to do it, he's going to do it. So, yeah, it's. I mean, it's just. Yeah, it's that's just the nature of the protocol. It's open to all, right? And yeah, so.
By the way, quick aside. I've been texting Brady the last couple of days. I don't know what he's doing. He hasn't been responding. Hopefully he's okay. Oh wait, sorry, I just got a text from. Oh, it's from Brady. Oh, he just
you're acting right now.
Everything's computer. I don't know what that
means. You didn't see this? Oh, it was so good. So Trump buys a Tesla outside the White House. And it's like, he's helping Elon. Tesla got slaughtered, political stuff. He gets into the Tesla and he just goes, wow, everything's computer.
Did he also was saying, I saw that he was also like, it's not for me though. I'm not going to be going in. When he showed him the car without the steering wheel, he's like, I'm not doing that.
I did not see that. So I needed an explanation there.
All right, good. I must have set up that joke well because I do get it, Steven. But
I completely.
That was the funniest thing in like the last year, maybe more.
So good.
I saw some comments on Twitter where it was saying someone's like, "Oh yeah, when I used to work at a call center at Comcast or one of the internet providers, I had this elderly woman call in, and she thought everything related to computers, technology, internet was all. She just called everything computer." And so she's like, "Hey, I have a computer with you guys." And the guy's like, "Are you talking about internet service?" She's like, "Yeah, I have computer with you guys." And that's what I think of with Trump. He just lumps it all into one category. Oh, it's so good.
Hilarious. Classic boomer, right?
Yeah.
Maybe we can hit quick on Bitbonds. I know you had some thoughts on that, John. I'm not so familiar with it, but I found this Bitbonds in a nutshell. Let me know if this is accurate. 90% goes to government funding, 10% to buying Bitcoin. It's got 1% interest annually for 10 years. 100% of the BTC upside paid, up to 4.5% compounded annual return. Remaining BTC upside split 50-50 with the government.
Yep. So yeah, that's the best, shortest summary you're going to find of Bitbonds. I'll say that that's just one version of Bitbonds. Brian Estes had one maybe 3 weeks, a month ago or so, where there was not even that share of, 100% fills the 4.5 annual return, and then the rest goes to the government. You could play around with that, right? These are all proposals. There's not just like one Bitbonds proposal out there. My biggest takeaway, well, before I even give the takeaway, I should say I love that the conversations are happening. You have to start somewhere if you're going to shift the Overton window that much. So I don't want to come across as like a hater on Bitbonds. But my takeaway is that I think this is really, really unlikely to happen, especially at the U.S. Treasury level. And, think about it. We are just at the point where a week or two into the U.S. government officially saying, hey, we're going to hold Bitcoin as an asset. And they already have Bitcoin, right? And they're saying, hey, we're going to look to buy more. I think that needs to be digested by the government itself before they start saying, hey, we're going to issue a bunch of treasuries that have some Bitcoin in them. I think it might be years before they actually issue a treasury that has Bitcoin in it. And the reason really is because of the optics and the fact that the treasury is the issuer of the currency. If you issue a bond, normal treasuries are just denominated in dollars. If you issue a bit bond, you're kind of signaling it's like, hey, we didn't have enough natural demand for our treasuries when they were only denominated in dollars. So we had to add this Bitcoin kicker to get more demand for treasuries. That just does not signal a really good message to the markets. Another thing would be that you might say, well, what if they get into a hard situation? They're in a bind and there's not enough demand. There's already a playbook for what happens there. The Fed comes in and buys bonds with, QE, with money created out of thin air. I think they're way more likely to run the Fed playbook, which is something that every central bank does around the world, than they are to add Bitbonds. One final comment would be, I think what's more interesting is a state or local government who are huge borrowers. The municipal bond market is a huge sector of the bond market. I think it's more likely for them to do something like bit bonds because they're not the issuer of the currency. They don't have those issues with the optics of basically turning people off and making people wonder, whoa, you issue the dollar. Why are you adding Bitcoin to your bond now? So it would take a very forward-thinking state or local government to do this. But I think it's more realistic that they would do it rather than the US government, at least at this point in time. But open to feedback. Curious what you guys think about it.
I'm with you 100%. I think it's a long way away. I think it's an interesting concept. I don't think we're anywhere near that. What got me a little more interested in it is actually if the US government holds Bitcoin on its balance sheet, these make more sense because in the process of doing them, they increase the price of Bitcoin, which feeds back into the balance sheet. So like them doing these in isolation without Bitcoin holdings, interesting. Them doing these with Bitcoin holdings, I think is like wildly net positive for their financial situation.
So you're saying they're going to have to stack a lot of more Bitcoin in their strategic reserve before they start thinking of something like this?
I think it becomes significantly more beneficial for the US if they so yes, they issue the bit bond, they get a lower interest rate, but in the process of doing the bonds, they're putting a constant bid under Bitcoin, which is then increasing the value of their holdings, offsetting the borrowing or at least the interest expense that they're doing. It's pretty compelling.
I agree. Sentiment's weird, but the numbers make sense. And so there is a time in the future where we're not selling treasuries and we need to, where we could apply this to some segment of the market. I think we could land that, John, in the next 5 years. This year feels
5 years, man, and Bitcoin, a lot can happen. I feel like that can happen in less than that at this rate, the rate we're going right now. We went from the government's going to ban it being the main talking point to where we're at now in, what was it, 4 years or something. So not even.
That plus stable coins buying treasuries, right? We're going to lean into that hard, it seems.
Yeah, totally. Yeah, and I mean, after that, the announcement of, this whole year, Bitcoin dominance has just been continuing to go up. It's kind of a wonky metric, obviously, because the market caps of a lot of these small cap cryptos are a little sketchy, but just constantly going up. And then with the news after the SBR and then the separation from the crypto thing, it's like I feel like people are finally starting to slowly separate these two in their minds. It's still going to take a while for them to accept it, but then we got the ETH bleed out, which is just painful to watch at this point. Kind of feel bad for them at this point, almost. It's just brutal. Don't like to punch down, right? So, and then there's the ETH. The ETH. This was a chart that was it, Brandon? You wanted to chat about here? ETH BTC profitable days.
Yeah, so just looking at this chart quickly, the red part of ETH's history, if you made a purchase of ETH during that period, you would be down today against Bitcoin. So you had to time the bottom in 2019 or buy in like pre-2017 era in order to be up on your position. That is just a bloodbath.
Yeah, total bloodbath. And then there's this XRP basically flipped ETH in terms of what was it again, Brandon?
Yeah, it's fully diluted market cap.
Fully diluted market cap.
If you look at the XRP outstanding today, it's like 58 million or billion or whatever the number they use, but 100 billion or 100 million is the total supply. And so let's say they issued all tokens today at the same price. Yeah, flipped ETH.
Crazy.
Guys, no one's commented about my shirt, but this is a V. This is for Vitalik. I just want to send him some support. I think he's going through a rough time right now. The V is definitely for Vitalik.
Love it. I mean, it's mind blowing to me. Even just like the XRP flipping ETH. After the SBR, I think I was saying this off before we went live, but I just don't even understand how something like XRP. I mean, they have a great marketing department. Maybe you guys have some insight in how they're continuing to stay, where they are, because it's just I feel like that just obliterated their narrative. Like Trump has already said he's banning CBDCs. Weren't they wanting to be like the underpinning of CBDCs for a long time? And then XRP was like, they're going to be the new Swissum. And it's just like, it's clearly not happening. So, yeah.
Yeah. And I don't know. I don't know what, it's rallying on. I don't know what they're waiting for. Maybe it is just marketing. It's hype, getting people to think something is coming. But yeah, kind of hard to be bullish on any crypto not named Bitcoin at this point in time.
And then, I mean, there's this too. I just got to highlight this because it was Patrick Bet David basically doing I don't know if it was just him talking about it, but just a really bad take on XRP. That he's got a
for
huge audience,
someone
so
that
let's have a look at
doesn't
this and
want
get some
to
comments on it.
specialize in this. It is something you have to pay attention to. Here's why. Let's just say XRP decides to, all of a sudden, they replace SWIFT. Let's say that happens. If XRP replaces SWIFT and FedNow, you know what happens? Let me give you some numbers here. XRP's ledger processes transactions in 3 to 5 seconds at nearly no cost, making it significantly faster and cheaper than SWIFT. So SWIFT processes $5 trillion daily, or 1.25 quadrillion annually. If you didn't know what that was, quadrillion annually, SWIFT. If XRP captures 5 to 10% of volume, let's just say 10% of volume, $125 trillion annually. The demand for XRP, by the way, it could be any of these other technologies we're talking about. Analysts estimate that a $10 trillion market cap could push XRP's price to $100 per token, with full replacement potentially driving it up to $1,000.
Yeah, just painful. Yeah,
That's like,
he's had Saylor on his podcast, I feel like, more than once. And
the thing that's so crazy there is the, like, oh my God, just the equivocation of just like, it's like me starting with like, well, if Apple started producing every single item in the world, which all people use, then it would be worth a lot. It's like, oh yeah, if they just started building everything you've ever bought. Yeah, of course, no shit. Like, there's no world where that's happening. It's such a, like, if everybody stored 100% of all their money in Bitcoin, then Bitcoin be worth a lot of money. Like, no shit.
I think the problem with this is actually upstream of that. Like what he's saying is, I don't understand money, capital assets, store value assets. Instead, I understand businesses, right? And I think a lot of people are in this situation. We come into Bitcoin with no monetary theory understanding. And so we're always looking for use cases. That's the XRP narrative. It's enterprise software for banks. And it's really easy to grasp that with our existing priors. But most people don't realize that Bitcoin can be a digital gold asset worth 100 trillion that no one uses for payments, right? And people always think payments are the thing. Well, payments are a tiny market, like hundreds of times smaller than store value assets.
Yeah, we're talking about the largest market, one of the largest markets out there, money, right? It's like, it's not just the competing with Visa and MasterCard or whatever and Swift. It's like Bitcoin is, that's why it's like, we talk about it being digital gold. It's going up against the 1,000-year-old reign for money, which is gold, like real money, right? So yeah, you're right. I think it comes down to a fundamental misunderstanding, or just like, I mean, I get it. I was in that zone too. Before I found Bitcoin, I did not understand money. And I feel like people, when you tell them that, oh, like, what is money? Everyone thinks they know what money is, right? But have you actually really considered and thought deeply about what money is and what our money is and what happens, right? And I don't think PBD has done that clearly.
Not until you watched 40 hours a week of the What is Money podcast.
Exactly. All 200 hours of the Saylor and Breedlove deep dive.
This is, the Bitcoin Bugle's big on this.
Yeah.
Speaking of the Bugle, it looks like you and Corey are going to the big dance this year, huh?
We're going to win this thing. Maxi Madness is on. This is a yearly competition of all the best Bitcoin influencers. And me and Corey, we're going to crush this thing. Everybody better watch out. Maxi Madness by the Bitcoin Bugle. It's a competition.
Oh, cool.
Yeah.
That's fun. You guys are going head to head. That's great.
Eventually, it's like there can only be one. So eventually our paths will intersect in a direct head-on-head confrontation. But first there's, 50 to 100 other people to get crushed underneath our boot.
Yeah. You guys get mistaken for each other all the time. So it's fitting if you guys go head to head.
So I do have to clarify, I'm not wearing a V for Vitalik sweater. And since you mentioned the bracket that the Bugle's doing, this is a V for Villanova, by the way. It is, I do want to send thoughts and prayers to Vitalik, but the V is not actually for him.
I actually do feel bad for Vitalik in a way right now because the ETH narrative, the ETH vibes are down bad. And when that happens, they beg for Vitalik to come in and fix everything, right? But if ETH vibes are good, Vitalik's role is minimized. And so we're decentralized. And so he just takes it on the chin. And I don't know. Remember when he wrote that Bitcoin maximalists were right article on April Fool's Day a few years ago? He made a pretty good steel man for Bitcoin.
Yeah.
I think he holds that position in his head somewhere. And
I always wonder that too. I'm like, does he just have a bunch of Bitcoin and he's
I'm sure he has Bitcoin.
he's got, oh, yeah, of course he does. I just mean like, does he understand it, right? I mean, I'm sure he understands it too, but he was like early on in Bitcoin, right? Like he was like, didn't he start Bitcoin Magazine or something?
He was one of the contributors. I don't think or maybe he founded it, but he for sure wrote articles there.
Right. I remember watching an old documentary way back and seeing Vitalik in it. He had like he was like a Bitcoin fanboy. It was pretty funny.
That's right. If we're closing in on time, should we do a couple of quick hits?
Yeah, let's do quick hits, Brandon. You wanna dive into something?
Yeah. So two on my mind. One, maybe Stephen, you can frame this up, but the EU made a comment saying that we're going to confiscate 10 trillion of citizens' unused savings to support the war machine. What a turn of phrase, unused savings.
It was crazy. I saw that and it was like, what per se are unused savings? Surely not mine. Yours. Yeah, you're not using your savings. Mine are actively in use, generating APY.
I mean, this could launch us into a huge economics debate because and I think Lynn posted something about this too. She's like, how people respond to whether the term unused savings, someone saying it exists, it doesn't exist. That like is the crux of so many schools of economic thought and their differences. But yeah, it's just ridiculous. It's like, if my savings are unused, does that mean I'm lending them to you? So you're now using them, but are you going to pay me something to lend them to you? And where are you going to get the funds? And what happens if you don't pay me back? And what is this denominated? Like all these questions. It's kind of nuts that what group was it? The ECB or okay, ECB or someone in the EU very high up basically said, we're going to do this from unused savings. I cannot believe that made it into the announcement. Like they didn't have anyone looking at that saying like, hey, this, is a horrible, like even the average person who knows nothing about economics is going to see that and be like, wait a minute, hold up, you're doing what? So I think it just speaks to like how much of their own Kool-Aid that they're drinking. Like that's a totally normal statement for them. And they just had no clue that that's like a ridiculous thing to put in a public statement.
You can just hear the sucking sound of assets leaving the European Union into Bitcoin.
Crazy.
This is why I don't think that the capital rotation really has legs from US assets to like European and Chinese assets. Like I get why people are running right now and maybe it's a good short-term trade, but like these markets are terrible.
The argument I heard was that it's not that there's that much strength in Europe or in the East, but US equities have been getting an unfair percentage of the flows for so long that they're just at historic highs. So even if the US equities are flattish for a year, international equities will still outperform, still worth the trade.
Totally. And the other thing is just like we're being extremely tight. China's pumping stimulus right now with everything they've got. So, I mean, I get it in the short term, but these are not hospitable long-term homes for capital.
Strong agree. Okay, one more quick hit on my mind here is that the Treasury Secretary announced, I don't know all the details here, so correct me if I get something wrong, but Treasury Secretary picked 30 zip codes in the US, and they're having we're going to spy on all the transactions policy lowered down from $10,000 per transaction to $200 per transaction. So effectively all those zip codes spread between California and Texas, full financial surveillance. And of course, it's pitched as we got to stop the terrorists. That the drug cartels are now terrorists. So presumably that's what they're going after. However, I really don't like the direction this is going, slippery slope, et cetera, et cetera. Are we saying that we're not good enough at policing our border, that we need to do extreme tyranny to get the job done, like
It's bad, man.
pretty weak sauce.
Yeah, I didn't like that at all. That's I get they're, trying to do whatever the heck they're trying to do down there, and it's just in a few counties, but it's a bad precedent.
It's an overreach, no doubt. You have to have faith and confidence that they're not going to abuse it. And, I don't know why.
Not a good track record for that.
Yeah, hard to make that argument that it won't get abused at some point.
Yeah. And I guess that's a good place to end it. That's why we Bitcoin, right? Bitcoin is one way that we can kind of remove some of the controlling and corrupting forces away from. It's one of the most powerful things that the governments use to control us in it, which is our money. So that's why we need Bitcoin. All right, we'll wrap there. Thanks for joining, everyone. This is Swan Signal Live, coming to you every Friday at 2 p.m. Eastern, 11 a.m. Pacific on YouTube, X, and LinkedIn. Brady will be back next week, I believe. So, but if you're watching on X, make sure to follow the Swan handle. Tons of high signal Bitcoin news and analysis. We dropped our first long form article last week by Lynn Alden and Ben Workman, and it was fire. So check that out. I think we got it pinned on our profile. And we're going to have lots more exciting, high value, deep analysis stuff coming on there. So stay tuned in and follow the @Swan handle on X. Also, make sure to subscribe to the YouTube channel, Swan Bitcoin YouTube channel. We're one of the largest Bitcoin only YouTube channels on there. We post tons of awesome content every week, like the Bitcoin news and commentary show that I put out on Tuesdays and Thursdays. We got hundreds of hours of Bitcoin educational content, clips, and entertaining films. So check out the Swan Bitcoin YouTube channel, and check out swan.com, or download the app by searching Swan Bitcoin in the App Store. Swan is a Bitcoin-only financial services company, and we offer tons of great services, so check them all out at swan.com. All right, gents, it's been great. Have a great weekend, and we'll talk to you soon.